Hello and welcome to this Forex Preview at xm.com. I'm Maria Pachardis, and joining me is Senior Investment Analyst Rafi Boyadjian. We'll be discussing the upcoming FOMC announcement and the outlook for the US dollar. So Rafi, the lifting of the lockdown restrictions has definitely had a direct effect on global economic activity. Given the signs that the economy is starting to recover, what do you think we'll hear from policymakers when they conclude their meeting on Wednesday at 1800 GMT? Are they likely to make any changes to their emergency programs?
Well, Maria, it's looking increasingly likely that the Fed will probably not be making any changes to their policy, at least in the next month or two, because as you said, we're seeing strong signs of a recovery. We did have that very strong jobs report out of the US on Friday, and markets are convinced that we're now well and truly on the path to a recovery. But of course, the Fed remains very much cautious, and before the blackout period, when we last heard from Powell and his colleagues, they were still pretty much cautious about the outlook given all the uncertainties. And one of those main uncertainties, the main one there to be concerned about, is the threat of a second virus wave, and that risk is perhaps even greater for the US, because the US does appear to have started lifting its lockdowns before there was a significant reduction in the number of new daily virus cases. On top of that, we now have those mass protests across many US cities. We're seeing thousands of people gathering for those demonstrations, and that will only fuel fears of a second virus wave. So it's probably too early for the Fed to begin scaling back any of its emergency programs.
So if policymakers are not going to scale down their stimulus measures anytime soon, what do you think their next move will be?
Well, there's a lot of speculation that the Fed might introduce yield curve control. So that is something that the Bank of Japan introduced a few years ago. And it's an alternative to, say, for a central bank that does not want to go negative. So you could say that's perhaps one of the last remaining tools that the Fed has as far as interest rates are or one of its main policy tools are concerned, but we're unlikely to get yield curve control at the June meeting. It'd be interesting to see whether or not there was any discussion held about it, but it's too early for that, because especially now that things do appear to be improving, and in fact there's been some mixed signals from the Fed, because if you look at their daily bond purchases, they've actually been winding those down and perhaps sending the wrong signals to the market that things are good enough to scale back their purchases, but that's more likely to do with markets being calmer, and so the Fed might need to clarify that, and of course whether or not they're planning on any other measures in the future.
And finally, how do you think all of this will affect the dollar?
Well, the dollar has seen a pretty sharp sell-off over the past week or two. If you look at against the yen, however, it's actually been rising because, of course, the yen, like the dollar, is a safe haven currency. So if we were to see perhaps more optimistic language coming from the Fed, coming from especially from Fed Chair Jerome Powell in his press conference, then for sure we could see the dollar sell-off accelerating against other currencies, but the yen climbing, the dollar climbing against the yen, because of course what we've been seeing is that when there is improving optimism, the dollar seems to become less appealing because of its safe haven status throughout this crisis.
Rafi, thanks so much, and thanks for joining us at xm.com.